Awesome. Cool. Well, thanks for coming, everyone. Margaret, thanks for coming. So basically, we're going to be going over renovation loans from a high level today and kind of steps you can take to purchase or refinance to build your dream home. Just fun stuff.
Great. Yeah, a lot of this, the biggest thing is you can use it for purchases, refinances, and it can also be a tool for sellers to use if they want to renovate before they sell as well. So they could refinance, make some improvements, and then sell. Even if you're an individual who does investment properties, you can take advantage of these products.
Absolutely. And by far of all the loan products I do, this is probably the greatest success stories come from utilizing these renovation type loans. It allows people to access neighborhoods that they wouldn't normally be able to if they bought a move-in ready home. Also creates really, really good equity positions for clients, which is just amazing. So we'll be going over kind of the nuances of that, and yeah, I'm excited.
So hey everyone, my name is Rachel Zelaya. I'm hosting this webinar today with my friend Louis Berman. We've done lots of work together. I am currently licensed realtor. I'm with Fairfax Realty. We also do a lot of fix and flip projects, rentals and investment projects, small to large scale, personally under the Zelaya Homes brand. So I've been 9 years in this business. I've been involved in over 100 transactions. I flipped about 75 houses and currently hold about 15 personal rental properties. My husband, Jay, he runs the construction side of things and he's the pro on that. So I've been involved in every type of project from small, easy paint projects, paint, flooring, carpet, to large scale tear down multi-million-dollar residential builds to multi-units.
Perfect. And you guys are incredible at what you do. I mean, all the projects that you post on social media, all the projects you help our clients with, they're amazing. I've been in the mortgage business for about 6.5 years now. Personally, I have about 9 rentals that I've all renovated, gone through the renovation products, and renovation loans that we currently do are conventional FHA and VA renovation products here at Fairway. So I think one of the biggest things is when I get asked is, do you do renovation loans and how do they work? And, that's kind of the meat of it. So with renovation loans, it's not just a loan to do the construction for the project. When you purchase a home or whether you refinance a home, we're going to give you a new mortgage where we basically take the purchase price or the existing mortgage balance into consideration, give you money for the renovation budget that you have, plus a small contingency in case that project runs over budget that you can access. So if you're purchasing a property, your down payment is going to be calculated off of the purchase price, plus the renovation, plus that contingency. If you're refinancing a mortgage, your loan amount is going to basically be the cost to cover closing costs and pay off your existing loan balance, plus that renovation, plus that contingency. And depending on if it's a purchase or refi, the equity position is going to, it's ultimately going to be placed on for refinance, the new appraised value after the renovations are completed. And then the next piece, so we will not do these products are for people, human entities, right? Residential real estate. So you can do them for an owner occupied purchase, you can do them to fix up a second home or a vacation home, and you can do them for investment properties. And then, kind of in the investment property space, we have products where you can utilize this with as little as 15% down, which is really cool. You can do these on 1 to 4 units properties, so it's not just limited to single family homes. And one of the big things is it has to be an existing structure. These are not ideal for tear down projects where there's nothing there at that point to rebuild something. There are some different nuances that we'll go into as it comes to adding certain types of units and the construction, the extent of construction that you can do. And then, really the why behind these renovation products is that you have the ability to create a custom home that's kind of set to your standards with these products rather than buying somebody else's creation, which can be a really, really cool tool, because with limited housing inventory, which we've had in this market for a very, very long time, people want options, and they want the option to be able to make that home theirs. And this is a really cool tool to be able to do that.
Yeah, one thing to note, one thing to touch on, Louis, with the note about a full tear down. So a lot of times there's homes that are in great neighborhoods on a good lot, and the house is small and functionally obsolete, but the values can support a big scope. So like a major home addition where you're going up or back is allowed, or even digging down in the basement, as long as you're increasing existing square feet. It's if you get into a full, complete tear down where you're saying everything is coming out all the way down to the dirt, and going new from there is what's not allowed under these types of loans.
That's correct. Yes, additions are totally okay. Basically, they don't want you knocking down the existing structure and then building a brand new one. So it can be as simple as, the easy jobs that you spoke about: carpet, paint, tile, all the way to massive additions to be able to come up to that market equity. Which is really cool. Yeah. And, typically the next question I get asked, well, is a renovation loan my only option for paying for renovations? And typically the people will go about it, 2 or 3 different ways. Some people will just pay for renovations with cash on hand. That can get very expensive. And if the project has a little bit of overage, it can be very devastating for people. So one of the benefits here, as opposed to cash, is being able to finance it with a fixed interest rate loan over a 30-year period. And when you compare that to people that have existing homes, such as like an equity line, they want to do it with an equity line. The goal with the equity line is eventually to refinance or pay it down aggressively. So it's still a very, very disruptive piece of somebody's financial budget to be able to accumulate that, rather than, hey, we're just going to give you a mortgage for the total amount and you have 30 years to pay it back, which is great. And interest rates for these are not drastically different than great market interest rates for the Fannie Mae, FHA, VA loan program, which is really, really cool. The kind of some other highlights: there is a contingency budget. So a lot of times when people go into a renovation project, you kind of hope for the best. In this case, we don't. We assume that things will run over. And if you don't use any of that contingency budget, it just goes to reducing your loan at the end of the renovations. Another really cool feature, and people kind of take this for granted a little bit, is that renovation projects can drastically change. You can go from fixing one little part to doing the whole house. And then the expectations change for the contractor. They change for somebody personally doing it. They change. So what happens here is everybody has a goal and a well-organized game plan going into the renovation, where we kind of have to stick to that. It's not like things don't change from a minor perspective, but generally you have a large scope of work that's agreed upon by all parties and very easy to execute from there. The next piece of it is creating that financial security, not having to fork out tons of cash. If the appraisal allows for it and there's a lot of equity, we can actually roll in 6 months of payments when the house is going to be uninhabitable. So you wouldn't have dual expenses while those renovations are going on, and you need to find somewhere else to live. And then, regardless if you choose to roll payments or not, if you close, your next mortgage payment really isn't to that second calendar month. So if you close in January, the first payment's not till March. So you have a little bit of alleviation and flexibility there. So the big goal of this is to provide a very sound experience, very safe experience for all parties. I think they're just a really, really great product.
Yeah, one huge benefit, to just reiterate, is that these loans are like pretty much the same as the market rate for just a typical purchase loan. And even a lot of the terms, so the loan to value, including all the construction budget. So once upon a time, they were a lot more expensive. So it was cost prohibitive for some people. But Louis has closed several loans for my clients, and they're taking advantage of these low rates. And then they're able to roll in all the construction costs and get exactly what they want in a neighborhood that, they say, oh, we looked at this one and we lost out on this property because it went too fast and we weren't ready, but we want the same renovated home in this area. And then that's when we can actually use that to find something that needs work and kind of work backwards, figure out the budget, make an offer, get under contract, and roll it into a construction loan in there. And they're still approved up to the same amount, and they get to design it how they want it.
Yeah. No, and that's just a huge benefit there, Rachel. It's such a really cool tool, and I wished more people utilize these programs. Like I said, it's the unsung hero, and it can really make a huge difference in people's lives, being able to do these things without having buckets and buckets of cash to be able to throw at a renovation. I think one of the biggest hindrances and questions I get, even from like experienced loan officers, like, are renovation loans really, really hard and miserable? No, we go through, we at least do 1 or 2 of these a month, and we're very well versed. Fairway actually has a really cool team that'll take care of a lot of the kind of like the very important details that exist out there. But then again, we're involved throughout the whole time as well. So just like any process to get a mortgage, the first step that you're going to have is, in some cases, with the contractor, to get an idea of what the type of work that needs to be done to the home. If you're using this in a purchase loan, it'd be great to have an idea of, the overall cost of the project they're going to do, but you're going to have a pre-approval call. And really, if it's a refinance call, we're going to get an idea of what you want to do to the property. If it's a purchase call, you're going to have a pre-approval up to a certain amount. And whether there's a home identified or not identified, we're still going to have a pre-approval number, and everything kind of has to fit within that piece. Now, the next piece that really is the biggest step in the process is the contractor bid and contractor documentation process. So right now, Rachel, you and Jay are registered with Fairway. You're very well versed with the product. Getting a contractor registered is an extra step. You guys are great with paperwork, so there's not a lot of apprehension there. Some contractors, it's very important who you work with, do not like to fill out paperwork, and they can make renovation loans very, very difficult because they don't fill out the paperwork. Because there's really 2 pieces of paperwork that we get. We get a contractor profile with some supporting documentation, and the next piece is the bid. So the bid in this case tells the appraiser what the property is going to look like when it's finished. And the appraiser takes that bid, he goes out, and he will use and find comparables that match the end results of that bid and give you like an after repaired value, after renovated value of the property. And then everything will be calculated off that. So that's the biggest extra step when it comes to comparing a normal loan versus a renovation loan. Now, if you use a 203K standard loan, there's a piece for a HUD consultant. 203K loans used to be very, very frustrating for a lot of people because you had to get 3 different bids. HUD consultants have been, kind of hard to work with in the past. We have a very good network of them that we can introduce people to. And the other piece is that you do not have to have 3 bids, because honestly, that was doing a disservice to the client at the end of the day, because people were underbidding each other, not floating the full extent of the job. And it was actually not advantageous to the client. So the HUD consultant piece only on 203K loans. We have a good network of those types of people. That will be an extra step with the 203K loan. And then just like normal, there's the loan approval. And then after funding, that's when the draw schedule begins for the contractor. And depending on the loan program, they can take 50% of the materials budgets out to get started. So they're not in a detriment financing the loan. So it's actually a benefit to the contractor as well to use a renovation loan, because they have access to capital right out of the beginning before they even start.
Yeah, and another big piece with the contractor part is to start discussing these ideas between, if you're a realtor, discuss it with your clients, and if your client, discuss it with your realtor. Start that conversation early on that that's one of your goals, or you're possibly considering that option. And then from there, start communicating with a contractor. And when I say contractor, you really want to work with a general contractor, a GC, or like a design build firm that can actually manage the whole thing. Louis, correct me if I'm wrong, but you're not allowed to you can't self-manage this. Is that right? You have to have general contractor's
You have
license.
to have a general contractor. Now, the only way, so in some cases you'll need separate bids, and that's if you're getting somebody that's doing a specialty that will not comply with the GC. Thankfully, you guys have such a great reputation with your subs that you guys are capable of managing a process like that. But yes, you can't do any of the work yourself, and you cannot manage the entire job by yourself. You need a general contractor to complete the bid needed to order the appraisal, and have them provide very important documents like insurance, things like that, so that you're protected. The whole goal of a renovation loan is to protect every party in this, and make it as easy as possible for everyone to complete the job.
Yeah,
So you can't be a licensed contractor and get this loan for yourself as a purchase.
So you cannot do the work yourself. So if you're a licensed contractor, you can't be the person that's doing the job yourself. So a different licensed contractor will have to complete the job, which, it's again an extra layer of protection for everyone.
For these types of loans, there are other loans that
Oh, yeah,
Lewis and
absolutely.
I have contacts for. That's more on like the commercial side if it's directly
Absolutely.
to the builder. Yeah.
Yes. Yeah. These Fannie Mae, FHA, VA loans, they want a licensed contractor who's not the entity taking out the loan. But there are multiple options. Rachel, I know you have tons of connections with other commercial options that will allow people that are general contractors to do the work themselves, which is awesome. And that's a great avenue.
Yeah, Lewis won't even let us do these loans for ourselves.
I know, right?
Yeah.
Terrible.
Yeah, but these are for clients that, and again, you're taking advantage of the extremely low interest rates and the low down payment requirement on this. So the intention is for individuals that, plan to either live in it or use it as second home or rent it out. Excuse me. The thing with the piece with the contractor also is that once you find someone that you like, and then try to work with them on getting some general pricing parameters, because you want to know like what you're getting into before you even start looking at houses and getting things under contract. It is a really busy time for a lot of builders and contractors. So a lot of them, it's going to be hard to get them on site, but if you can have a phone conversation, say, hey, kind of what's your range of kitchens, bathrooms, flooring, home addition, price per square foot, and other projects, err on the side of the higher number. So you have that, but use that to go in looking at places. If once you find something, you can get it done for a little bit for less than what you assume, that's always better than going into something in a hurry with somebody and they throw some low numbers out and then it ends up, not working out. So usually when we work with clients, we give them some like very general price parameters to start with. And then once they'll go and look at houses. And then once they find something, hey, how does this work? The numbers are the construction numbers, just take them all very generally up until it is under contract and the contractor understands that they have to provide a detailed bid based on the scope that the client wants. And that has to remain essentially the same throughout the whole process. So once the loan is closed, there's really not anything that can be changed drastically unless, if there's some extenuating circumstance that comes up that nobody foresaw coming, that's what the Lewis's team will withhold add an extra 10 to 15% contingency in there to cover that.
Yep.
But any major changes, it's not a good idea to consider that you could change it. Like, for example, if you went in there and said, oh, I wanted to leave 2 bathrooms and not finish the basement, and then you're in the process of the loan and the project, and then say, hey, actually, we wanted to finish the basement. Well, that's a pretty big, and add a bathroom. That's a pretty big difference, and there's no guarantee that that the loan can change at all. At that point, or there can be more budget for it. So that's a crucial piece of getting with your contractor ahead of time and discussing the scope and really what's going to happen. Because again, it affects the appraised value going into the loan so that you can actually get financed for the full project. And the pricing, again, you want to make sure everybody's on the same page with the scope and the pricing. And this contractor has experience with the age and type of homes, the location of the home. So a home that was built, prior to 1970, if it's a 1940s, 50s, 60s home, it's more likely that a lot of the plumbing, electrical, HVAC, if it's even there, and the wood and studs behind all the finishes will have to be replaced compared to a newer home built, after the 1980s, 90s, or more recently. Those homes don't always have as much rotted, wood and plumbing and electrical behind the walls, so the cost will be lower. But if they don't have any experience with the older homes or in even a certain location, I can tell you, there's some folks from far out. They could be 45 minutes out and they come to an area in anywhere in DC metro area, and they're not familiar with those age of homes or type. Then they sometimes can get themselves in a bad situation where they weren't assuming that a lot of things were bad. So you're getting pricing that was just based on, oh, we're just replacing the fixture. But Anyone who's local, who has the experience on similar types of projects, they're going to know, hey, there's a good chance, we give you a price to replace it, but there's a good chance that the plumbing will have to be replaced too. So you should factor that in. You can always back out costs as you go along, but it's much harder to add costs. So that right there is a huge piece going into the loan. And if you can find, someone, a company or an individual who's really good at that, working with you on that, then it makes Lewis's process much faster and easier. And the whole process, the client's happy, and the whole process afterward and throughout is much easier to deal with. It moves faster. And like Lewis said, everybody who goes through it and finishes a project, once they move in and they're finished, they have equity, they're happy, they got the house they want. It's really an excellent project. Just, it does take a little bit more effort up front to find some good people, set up a good team to go into these projects with.
Yeah, absolutely. And it's kind of, I think if there's any two big takeaways here, it's these can be incredibly awesome, and who you work with really, really matters from a contractor perspective, because the massive misses that I've seen with these, I've seen some great success stories. The massive misses have been people working with inexperienced contractors that have made that process very, very difficult, have had delays or misquoted things that impacted the financials later on. So can't stress enough how important it is to find a very experienced contractor. And you and Jay have done an incredible job on these, and it's been very exciting to see the after products. Perfect. Kind of the next thing that I wanted to go over are just the three loan products that exist for renovation loans. So the first one and the most popular is the Fannie Mae Home Style Renovation Loan. And what that is that's the conventional renovation product. So, kind of the big highlights here is that you can do loans up to the loan limits here in this DC, Northern Virginia area. Most of the loan limits are around $970,800, which gives us a ton of room for improvements. Across the country, the county, conforming loan limit $647,200 for 2022 moving forward, and for the last month or so since they've announced it. As far as the length of time the ideal project takes is 6 months. Now, I've seen these go over a year. Everybody has extenuating circumstances. So if they need to be extended from 6 months, that's totally fine. The goal is to get them done in 6 months. Now, as far as days from when you close to get started, this is the big asterisk. How quickly can the contractor provide the paperwork needed? So, some people go into the home buying process and they're not sure they want a renovation loan. And then this idea pops up, hey, what if we did one? If the contractor's on board and we get the bid very quickly, we can order the appraisal quickly. I've done these less than 30 days, which is awesome. I've had them drawn out further when contractors don't provide the paperwork needed. So again, who you work with matters so much with these, because paperwork's an integral part. A lot of contractors will just want to do the easy jobs where they'll get paid cash quickly. And they don't like filling out their name when they have to buy things. So it's very, very important you work with an experienced contractor and having a conversation with them, asking them if they're okay with the paperwork involved with doing a renovation loan is an integral part of this. So really kind of high level, what do I need in regards to lendability to be able to get a conventional home style renovation loan. So usually we want your credit score to be around 680, especially for the higher loan to values. We'll run everything through an underwriting system, underwriting software to see if we can get an approval. But that's typically where the sweet spot is for ideal pricing before FHA might be a better option. You would need to have a 5% equity position after the renovations are completed. So if you're basically doing your loan amount's $950, you need to be in a situation where your house is worth $1 million at the end of it, or you have to be get that after renovated appraisal at $1 million if that's the threshold. Your debt to income ratio, usually depending on the credit score, things like that, we're looking at a 45 to 50% debt ratio. Cool pieces that we can do. So if it's popular, if it's allowed in your county, or if it's common in that marketplace, you can do ADUs, you can do mother-in-law suites, you can do additions both upward and outward. You can do layout changes. Very, very versatile program. The only thing that you can't really do is add legal separate units. That would be kind of in the next product with the FHA loan that we talk about. So it has to kind of stay in that unit count that it currently is. Just because sometimes with things like zoning or whatnot, it can be a very difficult and prolong the process if that's not allowed, the unit split, or if it's a very difficult process. So that's those. FHA 203K loans. Oh,
Okay,
yeah, go ahead.
I just want to jump in one thing on the loan limit number. So the 970,800 for those, that just to clarify, saying that the total loan can be that including the construction. So,
Yep.
and if that's for the conventional, if that's 95% to 97% of the value, you're looking at an appraised 20 home that you in the neighborhood over a million, but there's maybe a home in the neighborhood that could handle, that could take it. You have a budget in, whatever the existing purchase price or mortgage is, you can roll in the whole construction cost. So
Yeah.
I'll
It'd be like
images of
1,020,000 or so would be that space where you're in a 5% equity position.
Yeah, so if there's a house, for example, 500,000 for sale, and it's a small little house, nobody wants it. It's like a 2-bedroom, 1-bath thing. It's all, the layout's all weird. It's all outdated. There's, some problem with it. That's a perfect option for something like this, especially Northern Virginia area where we are, DC and parts of Maryland, and all over the country. There's neighborhoods like this, but you can get the property for about 500,000, and then you have a budget of 470,000 to really expand on it and bring it up to that $1 million valuation, which there's a lot of opportunity to do projects like that in this area.
Yeah, absolutely. And that's, I've seen you guys do that before where, all it takes is, an addition and update, and it really drastically isn't going to impact payment all that much. And I can show you that in a little bit towards the end, but yeah, 100% spot on there. Perfect. So for 203K loans, 203K loans, we just went over the conventional family of renovation loans. The FHA product is the 203K product, and that's kind of the more well-known product that exists out there. Very similar features to the conventional product, but there's a little bit more flexibility. So, loan max, those are going to be rising conforming a high balance limit for the area. What's really cool about these is that FHA will lend 110% of the appraised value. So if you need to do improvements that maybe are more necessary from like a structural point of view or a functionality point of view that don't necessarily add a ton of value, you have access to this program where you can use this and go a little bit above that max appraised value. And that it can kind of be a nice fallback programs in some situations. The 203K consultant is needed when it's a standard 203K loan. So really what that is, the alternative product is the limited 203K. Limited, you can only have a $35,000 renovation budget, and it has to be, very minor items. And I can get happy to schedule a phone call with anybody to go over, the nuances of it. The 203K consultant is basically there to validate the bid, make sure that, everything's kind of in line with what those costs should be. And really just to protect the consumer and the contractor. Again, ideal project timelines completed in 6 months. I've done these in less than 30 days. If the contractor's on board, fills out the paperwork quickly, we have the HUD consultant in our back pocket, so we can move quickly on these if all the pieces are in place. And really the upfront requirements of these are a lot more lenient than the conventional loan product. So you can have a 640 credit score. If it's a purchase, you only have to put down 3.5% of the purchase plus the renovations plus the contingency, which is really cool. And then you can almost have a 57% debt ratio and still get this program, depending on the multiple factors. But we've gotten them through at higher debt to income ratios. So a lot more flexibility with this product, which is really cool. a lot more flexibility with the loan to value. It is an FHA loan, so there's going to be certain nuances like the FHA PMI that's that's not removable, that you want to basically refinance out of in some point in the future, but a very good product to get people into homes. It is also the best product, period, to renovate 2 to 4 unit properties because of the equity, the required down payment. So I think anybody in real estate, basically, if they had a time machine, they'd go back in time, buy a 4-unit property, right when they're right out of school, have their friends live in it, and then be able to, kind of negate their living expense, make money, and then move on to the next one. This is an awesome program for things like that, because of the minimum down payment required. And then we can use the rental income from the other units to qualify. Great program for those types of renovations.
Yeah, we have several clients and friends and people that have used it for that several times, especially it's not limited to first-time home buyers, but it's an excellent option for first-time home buyers. They can, buy a 2-unit, 3-unit, 4-unit, get it fixed up, and then move into a unit. And like Lewis said, rent out the other units, and then they live, they offset their mortgage payment. Oftentimes they're getting paid to live there sometimes. So
yeah, no, it's awesome. Those are my favorite stories on the planet. And then one of the misconceptions, just like you brought up, Rachel, you do not have to be a first-time home buyer to use an FHA loan. Typically, you only want to have, basically, it can be your only FHA loan. In some circumstances, like if there's a dependent added, like a new child, or you have to take care of an elderly parent, you can get an additional FHA loan, but just can't have an outstanding FHA loan unless you have those extenuating circumstances. So if you have 6 conventional loans out there and you want to use an FHA loan, great. It is for owner occupied purchases only. So if you're going to utilize that, it has to be your primary residence to be able to purchase with an FHA loan, or do a renovation refinance with an FHA loan.
But with the home style loan, they could buy a 1 to 4 unit or 2 to 4 unit with as an investment property, correct?
You can, yes, you can. And then typically the down payment that you're going to need there is around 25%. So that's why that gap is much different. But yeah, you are able to do that. And you are able to buy multi-unit properties and get money for the renovations for those options. Perfect, cool. And then really the last one, and it's not the greatest program in the world, but VA has a renovation product, and very similar to the limited 203K program, you can get $35,000 for renovations. They have to be pretty much mainly cosmetic or getting the building up to code, adding handrails, things that the VA requires. Typically that 30 to 45 day window is perfect for these. And then the cool thing is you don't have to put any money down for the VA loan, barring the appraisal comes in where it needs to. This does not have the same rule with FHA where it needs to be 110% of the sale price. It has to, basically the renovations have to increase the value of the property as well. One of the things that I think people VA loan program in any other space is hands down the best loan program that exists. If you qualify for it, you have the best interest rates for those programs. You don't have to bring a down payment in most situations. You just have to really take care of closing costs. So one of the basically the things that I recommend and what I've seen people very successful with is purchasing with an FHA 203K loan program, do the renovations with that program, and then do refinance into a VA loan in the future. And there's always closing costs associated when doing another transaction, but that's a good way to bridge that gap and be able to renovate with that. Because if you're doing an extensive renovation, VA is probably not the best option for you. But the 203K might be, and then you can refinance in that if you can afford the down payment with the 203K loan. Perfect. Great. And then Rach, can you kind of dive into just some high level costs per project?
Yeah, so the picture you see here, this is a project we actually did in Alexandria, and this would be eligible for one of these loans. The existing house, I think, was about a $450,000 purchase, and the construction was also about $450,000 cost. And then it ended up appraising for $1.15 million. So what's that? 1.5.
Yeah.
So it was a good deal. Let's put it that way. There was equity. There was over 100,000 equity created, and the house went from 900 square feet to about 2,800 square feet, 5 bed, 3 bath, big big open family floor plan is awesome. It was an awesome product. And so kitchens, just like general, again, high level stuff, a kitchen you want to assume is going to be somewhere between 30 and 60,000. Again, these are what contractors are going to charge. This includes management, purchasing material and getting everything done, permits. So this is like full turnkey prices. Some of you might see this and say, okay, HGTV tells me it's 15,000. But that's because those people are doing it themselves. They're just buying material. They're hiring like their friend to do the installation. So there is a big discrepancy. And again, you really need a GC involved, a general contractor, design build firm to help pull the whole project together and organize the whole everything, make sure everything's being done correctly. So full kitchen, about 30 to 60. It can go higher. It could be, it could be a little bit less, especially for like condos can go a little bit less because there's not as many structural issues that have to be repaired, crooked walls and floors, things like that, electrical problems, etc. But anyone who gives you significantly lower prices, I would just stay away from, because it's very difficult to do it for too much less than the $30,000 mark. Just because again, the material prices have gone up a little bit since a couple years ago, and labor too. You just want somebody who's going to get the job done right in the time frame. Same thing with a bathroom. They usually start around 15,000, can go to 25,000 or so per bathroom. Again, if you're doing a full house renovation or a major home addition, you're doing like 4 bathrooms and a big kitchen. Once you add all of these prices together, the whole projects, there's some economies of scale. So some of these like per bathroom prices could get better and come down a little bit. It also depends on material selections, but the bulk of these numbers are actually the labor and the management costs and the design costs and any architectural involved. The material is it matters, but these are not like super high end, and these are not dirt cheap. These are good middle of the road prices. It's going to get you a product that I would say the majority of people we work with appreciate the quality, and that's the minimum quality that they want, or it's nice for them. These are not like luxury custom anything that's hard and attainable. Flooring can be plus or minus $10 a foot. Again, it depends on hardwood, engineer wood, laminate, vinyl, things like that. That's labor and material install. It can go as low as $7 a foot, can go as high as $15 a square foot. It just depends on exactly what and what's going on with the existing space, but something to think about. And carpet is a little bit cheaper than the hard floors. And home additions range from about $180 to $250 per square foot. So again, it depends on what's happening with the existing structure, how old it is, how much can be reused, and how much needs to get replaced. The foundation is a big piece, and the lot is a big piece that drives these prices. So if the lot has any sort of water issues that need to be addressed, or if the foundation is in really bad shape and a lot of it has to be replaced or underpin or fixed, then these prices end up on the higher end. These are for the home addition. One other price I didn't put in there. So interior renovations, those can run about $100 to $150 a square foot for just the interior kind of full overhaul pricing. And there's several, these are very general numbers just to have some, something to work with. But excuse me, if you guys want something more specific, we have some more detailed pricing for what we kind of charge and what we tell people to expect from any sort of other builder out there or GC who's going to be running the entire project. Again, you have to put a pretty high value on somebody who knows how to run a whole project and knows exactly what goes into everything, the time frame, the coordinating, all of that, because it is a lot of work. And you don't want someone who is a flooring specialist and then they say, yeah, I got a cousin who can do framing, and then I got a brother who can do flooring, and they somehow put it together, and then like it turns into a big mess because nobody's thinking about how the electrical, plumbing, or HVAC is going to run. So you really need someone who does know how it all comes together. And I promise it's like always worth it, because they make the process very, a much better than just someone who's just trying to piece it together and pull it together, and they're trying to work on 10 other jobs at the same time.
Yeah, absolutely. And I think we were talking a little bit the other day about how everybody has an embarrassing story about how they tried to cut a cost or a corner, and it led to kind of a drastic impact in like their lives for a little bit. working with an experienced contractor is so important. Questions to ask every single contractor when you're interviewing them are how familiar they are with the area and how many projects they've done. Ask to see some of their work, because that guy that's cheaper probably is going to lie about maybe, completing paperwork, but probably doesn't have the portfolio either. So again, so important who you work with. I've seen contractors that have under quoted on these projects, and it has been it's been very tough for the borrower. It is so important who you work with. Perfect. And one of the things is that that gets daunting is like renovations are expensive. They're very expensive when you pay them out of pocket. When you pay them off, pay them over 30 years, it's not too terrible. So right now interest rates are at historic lows, which is awesome. So depending on the existing loan balance that you have and existing term, if you're getting a 30-year mortgage and you're financing $100,000 more, your payment, roughly from principal and interest perspective, is going to only increase like $475 per $100,000 that you add on. And it's really not too drastic of a situation. To kind of break that down even further, $10,000 is roughly $50 a month of an increase in principal and interest payment. I'm always happy to run numbers for anybody looking to do a renovation project. If you have a home already, it's a good idea to have what your current loan balance, interest rate is, your home address. You're more than welcome to email me that information, an idea of what type of improvements and the overall cost. It is so important before you undertake the process. And usually if you're in an existing home, have a conversation with Rachel. Go over what you want to accomplish with your renovation. That way I can get you very direct numbers on how that will impact your monthly mortgage payment. A lot of people in the purchase world on the fly, it is very important to have a very experienced realtor that not only has the realtor experience, but also the contracting experience, which is very rare, to kind of help gauge the expense of contracts. So if you're going to, the worst thing that I see is like if somebody tours with an agent and they tell them that, redoing the kitchen, all the bathrooms in the house and doing an addition is, $60,000, and that's not the case. That can be that can create a lot of unnecessary and very difficult conversations later on down the road. So make sure you get a very experienced real estate agent. Make sure you have talks with contractors to be able to go over a really good expectation of cost there.
Yeah, absolutely. And we've seen it too on our side. We hear from people, they reach out to us on the construction side. They say, hey, we want to get into this. We give them some general pricing number, then we don't hear from them again. Turns out they closed the loan with somebody else who gave them a really cheap number. They went with that because it was like $50,000 cheaper. They thought, oh, this is great. But then it turns out, partway through the process that contractor says, oh, I can't finish the job for this price anymore. I need more money, and nobody has it. And then it creates this trouble. And then calling us back again saying, can you help us? At that point, the loan's already closed. So it's pretty much, I don't know what happens at that point, Lewis, but unfortunately it has happened. So we see that happen so often that this is, why we like to host these types of webinars and informational sessions, just to tell people, if you don't think that you want to get involved in a renovation project, that's totally fine. And, just don't do it. But if you do want to do it and take advantage of the benefits of it, get like very realistic numbers on what it's going to take and work with somebody who actually knows what they're doing and what they're looking at. And it'll be a wonderful process. It's just a lot of people, the numbers seem like big numbers, so I understand like it's difficult, but if you look at all the equity, you might pay, like I said, $450,000 for that one home addition project. Sounds like a big number, but they got $150,000 or so in equity. So if that owner wanted to live there for 2 years, that owner could live there for 2 years, sell it, move on, and they would cash out on a ton of money, and if their financial system is, situation is set up properly, then maybe they wouldn't have to pay any income tax as an individual homeowner. So there's a lot of benefits that could be had. And on the investor side too, I wish they had a product like this, because we cannot, as investors that buy and we cannot one of these products where the interest rate is so low and the loan to value is so high, because we're telling them, hey, we're not going to move into it. It's just a business for us on that side of it. And I have so many clients and I say, hey, it would be actually cheaper for you to have us find you a project, fix it, and you move into it and go through that, than actually buying something that's already built. Because when there's no competition, and a lot of those builders, once something's finished, everybody wants to try to get the highest price for it. But once you get into it, you're locking in the cheaper purchase price of today's pricing of what you're buying, and today's pricing of a lot of the labor and material prices. And then, 6 months from now or so, 6 to 9 months when the project is finished, values have been going up, they've been increasing. So then you're getting a bonus of appreciation and value, and you get something that's like actually yours that you created.
Yeah, absolutely. And the equity position is not even it's not a joke at all. Like you're when you pay that massive premium for having this beautiful newly renovated custom home, when you compare them to the renovation loan, people are probably going to be in a better equity position buying the house that needs a little bit of work. It does, take a little bit more legwork up front, but it can be a really huge advantage to anybody with their financial picture.
Yeah, so we'll open up to questions. Anybody have questions?
I don't think so. It's pretty detailed information. Thank you.
Yeah, thanks for joining us, Margaret. We appreciate it.
Yeah, thank you. We're glad you joined. Again, we'll send out the recording. So it was a lot of information. So if you want to look back at it and pick out the tidbits, we'll send that out. We're both very accessible. These are our cell number, text, call, email. We get back to everybody fairly quickly, if not immediately. And heading into holidays, we have families, so it gets a little busy, but we're still available. And just if you have any questions or general, if you're not sure, you want some direction, we can point you to the right resources and help you in any way possible. But Lewis's team, again, I know from personal experience, I've worked with a lot of lenders, and it's hard to find someone, one, who enjoys the renovation loan process, like Lewis says he does, and really is excited about this for his clients because he has personal experience on this side. I have some lenders will say they don't want to do it because it's just a little bit more paperwork. And they move extremely fast. I mean, it's like over on a Friday night, you can say, hey, Lewis, I got a client. We looked at this house, and by Monday morning, we're under contract because he pre-approved them over the weekend, and we walked the property. So that in this market is crucial when you're purchasing something. If you already own it and it's a refinance, it also moves along quickly. We had a client that saw one of our houses in the same neighborhood as the home edition project that I showed you. They saw that one and they said, hey, we want to do that on our house. So we worked with them as clients. We just wrapped up that project, but they refinanced their loan. They got all of their construction financed. They got that home, and I think Lewis, their house, what did it reappraise for? Do you know? It was over $1 million. It was like $1.2 million.
Yeah, it was exciting. So it's it's just really cool seeing people take this extra step and then just have these really awesome results. So they're really awesome. Yeah,
it's certainly, it's worth it for everyone who's gone through it. And I say gone through it because there is a process. Some of those HGTV shows show some of the truth to it, where it's like, okay, it takes some time to get through the construction, but once you do it, it's an amazing result. So we're very excited for people when they want to go down this route, because there's so many options and there's so much benefit, not only having the home that you want and style that you want, but also just the equity is a huge piece. It's helped a lot of individuals and families just create additional wealth for their family, and just, know you're in under a year, 6 months, 9 months, something like that.
Yeah, absolutely. Well, cool.
Great.
So our contact is there if you need anything at all. We're always here for you to help in any way we can. But yeah, we're looking forward to it. Hope everybody got a lot out of everything today.
Great. Thank you very much. It was very helpful.
Yeah, perfect. Well, great. We'll see everybody later. Have a good one.
You too.
Yeah.
Bye.
Thank you.